Okay, guys. So today I'm going to analyze three pairs. The first one, EURUSD, GBPUSD. Then I'll also analyze the US dollar index. This coming week, we can see we have a lot of high volatility with events. Starting from Monday, we have the Euro HCOB manufacturing. So if you study these news events, they like when they announce there's very huge movements in the market. And what you can do basically is try to understand if you find it difficult to read these movements, you can just open it, then you can copy, this, and you can ask ChatGPT to explain to you in simple terms what it means, and from that you can be able to understand how you can trade these events. But basically, if you just analyze your charts, the technical analysis, and you find your entry points, everything will be fine. You can just use technical analysis and use the fundamentals to push the price. So these are the news events. You can go over them on myfxbook.com. Then as for the technical analysis, I hope you all can see my trading screen on the USD Index. So basically, the US Index is the United States dollar, right? And you can see on 4-hour time frame, it was bullish for quite some time. And at this point, price created a change of character, meaning it could go bearish. But since Trump is now president, that's very unlikely. The US dollar is more likely to gain strength because he's a very powerful person, and we cannot let that happen to the dollar. So here you can see price created a change of character, meaning it could go down. But as I've said, it's unlikely that it will go down because Trump is not the president, and his policies are in favor of the dollar, meaning it's more likely to go up. So this is the imbalance, the last imbalance left before price continued with this bullish momentum. And as you can see, it has been filled last week on Friday. The imbalance was filled. And after filling this imbalance, I'm anticipating a continuation. But before the continuation, maybe you'll see price coming to this zone before going up again. So what I'll do right now is I'll go to the 1-hour time frame. And on the 1-hour time frame, you can see price was in a bearish momentum. It created a breakout structure here. Then right after that, price created an inducement at this point. And after taking out in this inducement, this validated this point as a valid lower low. And after breakout structure, it validated this point here as a valid high high, right? So it means price is now in a bullish momentum. And if you look at this imbalance, it's already filled, right? It has been mitigated and filled already. So price is now going up. So after this change of character, you can see that this is the last inducement price created, right? And after taking out this inducement, this became a valid high high, right? And this high high, as you can see, it was broken. And because of that, this became a valid breakout structure, meaning price, the US dollar is now bullish, and I'm anticipating it to continue bullish because of the Trump's win to become the president and other things, right? So here you can see price is bullish on the US dollar index, right? Bullish. And what you have here is an adjustment which was created here on Friday, the last hour here, right? And this is our dealing range. From this point here, this is our dealing range, because this is the last swing low, and it's about to create a new swing high once price takes out this adjustment. So what you can do right now is you can see that everything is mitigated here. There's no any imbalance, right? And because of that, we have 2 points of interest. One is this imbalance, which is right here, which is mitigated, and it may be mitigated if price come to this zone, fill it, and then continue up. That's the first scenario. The second scenario, you can see that price left a demand zone in this area this week. So what might happen is price may come back for this week, and then after mitigating the week, it may continue going up, right? So these are the 2 scenarios. But as you can see, these are scenarios for selling. right? And we have another confluence as well on the selling area. If you use a line chart instead of the candlesticks, you can see that price is forming some sort of a flag, right? So if you follow this flag, you can see this, the first touch of the trend line, this is the second touch. So price is more likely to reverse on the third touch of the trend line, right? So what you can do now is go back to your candlesticks, right? So let me just lay out everything, right? So what you are likely to see when the market opens is the USD index will be a little bullish until it mitigates this trend line. They need to continue down to mitigate this imbalance, and that will more likely be a 50% zone. As you can see, if price mitigate this trend line, it will come back to 50%, which is also an imbalance, and you might see a bullish continuation from this zone, right? So this is it for the US dollar index. I hope you understood. Now going to the Euro US dollar. So on H1 on the Euro US dollar, you can see price is bullish, right? And it tried to create a change of character here, but it failed. And what it did is it created 3 liquidity grabs, right? This was the first one which failed to produce change of character. Then after that, price created another one which also failed to create a change of character. Then price created another one which also failed to create a change of character, right? So if you look on the H1 time frame, these last 2 candles were bearish, and if you go to the USD index, you can see it's bullish, right? So what this means is price may continue going up on the dollar, meaning on the Euro US dollar, it will continue going down, right? So what this means is we may see price continuing to go down on the Euro dollar on H1, and where might it go? It will go to this imbalance right here, right? So you may see price continuing to this imbalance on the bearish side, just as the USD is going to go bullish to this trend line, right? So after this, it's more likely that price can change of character. And after the change of character, price will reverse to any of these zones, maybe this order block or this supply zone, then continue down. And it's the same thing on the USD index, that price will retrace to this zone and continue going up, and the Euro US dollar will continue going down. So this is basically how you can understand the relationship between USD index and Euro US dollar. And I hope you're all getting this concept clearly. So the next pair we'll look at is the GBPUSD. So going to the GBP on H1, you can see price is bearish. It's bullish, bullish, and price took out inducement. So I'm also anticipating a bearish move. Why? Because the USD index, I'm expecting a bullish move, right? So here you can see price took out this inducement, and it's more likely to go to this imbalance if it's not filled already. Right. Just as the USD index is supposed to go up, the Euro dollar will go down a bit, right? Then reverse. Just as the US dollar is going up, then reverse. The GBP is going down, then reverse. That's my anticipation. Then from there, you can see I marked this point as a point of interest. So I'm expecting a reversal to at least this zone. And that will also take out the liquidity, which you can see on this point. Right, this liquidity and this point of interest, and price will continue going down. Just as on the dollar, price will continue going up. So basically, this is what I have for Euro US dollar and GBP USD. Now I'll leave this time for questions. If anyone has a question, you can ask. And before, I was recording this session, so you can also watch it on YouTube. I think I'll upload it today or tomorrow maximum. So thank you everyone for joining. We'll see this session on YouTube. In the meantime, I'll leave this time for questions.